A hush should have fallen in your living room the moment you logged into your insurance portal this week, because one of America's biggest insurers just dropped a story you can't ignore. The company formerly known as the Good Neighbor, State Farm, is now facing two major crises: a lawsuit for refusing to turn over data and a deeply troubling financial downgrade. For anyone over 30 who's entrusted their home, car, or life to an insurer, it's time to sit up and pay attention. The first alarm bell. Illinois Attorney General Kwame Raoul sued State Farm after the company refused to hand over statewide homeowners insurance data down to the zip code level, everything from premiums, policy types through claims. The regulator says this isn't just about one state's dataset. It's about whether a major insurer is playing fair with you. At the same time, in California, State Farm's homeowners insurance arm got its credit rating dropped from A+ to A, thanks to massive wildfire claim exposure and what S&P called significant exposure to natural catastrophe risk. In plain English, the company may be stretched thin. Here's where things go from eyebrow-raising to reckless. When the insurer you rely on for safety and certainty refuses to share data while its finances wobble, many of us feel the tremors. If your property or home becomes part of a numbers game you weren't told about, you've got cause to worry. If your agent says everything is fine while the parent company quietly raises risk thresholds, you've got reason to ask why. Let's look at how this plays out in real terms for you. A premium's rising fast. In Illinois, the insurer hiked rates by around 27%, citing inflation and storm risk, but regulators say the math doesn't add up. A wildfire exposure. In California, hundreds of millions in loans and commitments have already been mobilized to shore up financial weakness. Transparency gap. Regulators across states now demand zip code level breakdowns of losses, policy cancellations, and non-renewals, and State Farm says the request is out of bounds. So what's the fix? For starters, you don't just blindly pay the invoice and hope for the best. Ask your agent. Has this company been rated lately? Are there pending investigations? What factors are driving my premium up? Insurance isn't magic. It's a contract grounded in capacity, transparency, and accountability. Moreover, regulators and lawmakers need to step up. Rate hike justification shouldn't be a rubber stamp, and when an insurer commands a dominant market share in a state, oversight has to be active, not passive. That means regular audits, public disclosure of risk exposure, and meaningful consumer protections. Finally, you as the policyholder must remember, you hold power too. If it all feels sticky, if your rate jumps but you don't get an explanation, shop around. Ask for breakdowns. Compare not just price, but the insurer's footing. Because at the end of the day, you're not just buying a policy, you're trusting someone to be there when the worst happens. Here's the truth. Trust isn't given, it's earned and maintained. And when a leader in the field starts ducking oversight and carrying red flags, it's more than a corporate hiccup, it's a wake-up call. So before you clicking renew next year, make sure you're doing so with your eyes wide open. Because your home, your finances, and your peace of mind deserve nothing less.